Commissioner Pham. That's a nice ring to it.
Thank you.
Thank you.
It's great to be a commissioner. It's great to be back.
Well, we're very excited for you and your role at the CFTC. You've really brought some much-needed leadership on digital asset policy, and the CFTC has a long history of regulating digital asset commodities like Bitcoin and Ether. I said it. So this is part two. We had Commissioners Mersinger and Summer Mersinger and Christine Johnson here earlier. We were talking about the dichotomy between the SEC and the CFTC and the lack of clarity. So from your perspective, how do companies navigate and innovate or just figure out regulation and compliance when there's still such a lack of clarity on basic issues between SEC and CFTC oversight of these markets?
Thank you, Perianne, for that question. First, I'll just give my standard disclaimer, which is that the views I share today are just those of my own as a commissioner and don't necessarily represent that of the CFTC or of any other commissioner. It's a really important question, and as somebody who was in compliance for a very long time and who did regulatory strategy, it is the first and foremost question is you have to look at your legal and your compliance risks, your regulatory risk and your enforcement risk, and right now we are in an extremely high-risk environment. Not only do firms need to consider operational risk and cyber risk and all of those other typical risks that you'd be thinking about, but you need to consider the legal and the compliance risk. And unfortunately, there isn't an easy answer around that. Pushing for clarity is so important. I think as regulators, it's incumbent upon us to provide clear rules of the road, and then we enforce them. It goes hand in hand. You have clear rules, and then you enforce those. But if you don't have clear rules, then we're kind of in a gotcha environment, and I just don't think that's the right way to do things.
So you have made comments recently on Bloomberg. You have said that we are not in a turf war, that the SEC and the CFTC are not in a turf war. And I think sometimes it's easy for people to have that perception of, well, who has jurisdiction over this and who has jurisdiction over that. But you have really called for coordination between the two agencies. Can you talk about what coordination is happening and what needs to happen to move the industry forward?
I think there's a lot of, looking at the past and looking at the history of the agencies working together that's really informative. That's why SEC Commissioner Hester Peirce and I last year called for joint roundtables between the CFTC and the SEC to examine the issues in the crypto market and last May. And it's so funny because I feel like I'm having deja vu. We could just repeat all of the same things right now. If we had had those public roundtables back then with expert input and expertise, maybe we would have been able to identify some of these issues, and we would have been able to take a proactive approach to making sure that the risks were controlled and that people had their eyes wide open. One of the things that I'd like to call for now is that, again, with this sort of long tradition of the agencies working together, there is an inactive joint advisory committee for the CFTC and the SEC, where they looked at market issues in the past between the futures market and the securities market. Now, that advisory committee has been inactive since 2014, and so I'd like to call for both agencies to examine renewing that charter and going and creating a real way for the public to engage. In the absence of that, I'm moving forward with my own Global Markets Advisory Committee. We've constituted a Digital Asset Markets Subcommittee, and we've got over 70 nominations. I'm so excited from all parts of both the traditional and crypto native sectors. So I'm really happy to talk about some of the things that you could expect from that subcommittee this year.
Yeah, well, thank you for making the call to, I guess, reinvigorate this joint advisory group between the SEC and the CFTC. The Chamber has supported legislation in the past that does this exact same thing. Having that coordination between the agencies is absolutely essential during this time of having a lack of clarity. So we appreciate your leadership in making that call today. Talking about the GMAC, the Global Markets Advisory Committee, you run this committee, and you've also traveled the world talking with companies around the globe, and you're helping bring coordination to the global markets. And one of the things you've stood up is this Digital Asset Markets Subcommittee. The Chamber of Digital Commerce, we are participating in all of the above. We're very pleased to support you and support the GMAC and navigating the digital asset topics at the GMAC. So let's talk about the subcommittee. What is priority number one for Digital Asset Market Subcommittee?
Yeah, and thank you for highlighting my engagement, my international engagement last year, because other jurisdictions are ahead of the United States. I don't know why people don't want to talk about that. It's like this open secret, but it's true. Other jurisdictions have had regulation. They've had registration and oversight regimes since 2018 or 2019, and they've been examining digital asset firms. And one of the things that I asked about these other jurisdictions when I sort of asked them to tell me about their lessons learned and what works and what didn't work is, what really facilitates innovation. And it turns out that it's pretty consistent across the board, having a strong rule of law, having legal certainty, having political stability, and having that regulatory clarity. These three pieces are what creates the ideal circumstances or conditions for innovation to thrive. And so with what I can do today, with what the Digital Asset Markets Subcommittee can do today, we're going to come out this year and we're going to work on best practices and industry standards for tokenized digital asset markets. That's going to include looking at digital asset taxonomy. It's going to include looking at pre-trade, execution, and post-trade requirements. And importantly, it's going to include looking at governance, risk, and control frameworks. Because let's be honest, regardless of the underlying asset class, most of what you need for responsible, safe markets is well known. Whether it's equities, FX, credit, rates, it's pretty much the same across the board. This is something I highlighted last year in my 10 fundamentals for responsible digital asset markets.
All right, so let's talk about the need for best practices. So the reason why I'm excited about this and why I think it's interesting is because there's been a lack of guidance issued by the agencies. And this is another type of tool that the commissions have at their disposal. So let's maybe fast forward. We go through the process, we get best practices, we have consensus across all the stakeholders. Fingers crossed. This is going to be a lot of work, but I'm hopeful we can get it done. What's next? Once these best practices are put together, what is the process to make these actionable?
Mm-hmm. So what's exciting about having these independent advisory committees, it's really a formal way that our government has created through the Federal Advisory Committee Act for the public to provide expert advice and recommendations to federal agencies. That's what they're there for. And so what the subcommittee will do is it will put together these recommendations or a report. It will provide that to the full Global Markets Advisory Committee to vote on and to vote to recommend that to the commission. And what's great about the CFTC is that there's been a very long tradition of each commissioner sponsoring an advisory committee, and the reports and recommendations from those advisory committees actually do become rule proposals. And so it is a very constructive way to really find solutions to the challenges that we're facing in markets. And I also think that it's going to not only be able to inform what the CFTC is doing, it's also going to add to the international dialogue, it's going to add to the US dialogue, and I've also asked a number of non-US regulators and international standard setters to take observer status and to be part of that dialogue, to be engaged in our meetings and to present to us on what they're learning and what their observations are. And I've been really pleased about the reception that we've gotten from that. So it was a real roadshow last year.
Yeah, I mean, I think this is a very interesting project to undertake because there are already a lot of efforts in the industry to, I guess, self-regulate, if you will, or firms are addressing these issues internally. We have some coordination efforts. There's been several attempts to bring an SRO to market, but the problem is none of them have really come into fruition because there's not like a process, a regulatory process to make them law, where there is an actionable next step. This is a part of the regulatory process and really, I think, has the opportunity to bring true clarity to our space, which is much needed. So, okay, let's kind of uncover this a little bit. So we talked about the diverse sets of stakeholders involved in these markets, and one of the things that's been highlighted across the stage here today at the DC Blockchain Summit is just the differing kind of approaches that public sector and private sector may take, particularly when it comes to things like digital assets, open blockchains, decentralized finance. They don't necessarily fit super neatly into a lot of existing regulatory requirements. And then, of course, you all have this tough job of walking that tightrope of how do we ensure we're meeting our statutory requirements of protecting integrity in our markets, but we don't stifle innovation. So this is a large task. There's a lot of things at hand. what does the right policy look like for this, incredibly important and emerging technology of digital assets?
So I think what's important is that there isn't a one-size-fits-all solution, because not all digital assets are the same. I think that's something that gets lost a lot in the dialogue and the conversation, because let's face it, in every industry, there are going to be the good and the bad. And what we need to do is make sure that we have clear frameworks in place to separate the good from the bad, to make sure that we're going after bad actors, but also that we are creating the opportunities for growth in compliant digital asset markets, the people who are investing in having best practices and having robust risk and compliance frameworks. So what's important about putting this all together is that we need to think about what are digital finance and tokenized asset markets, so tokenization of assets, real assets like securities or derivatives or what have you. We need to think about non-financial activities and Web3. I think there's too much of a rush to assume that financial regulation is a panacea for everything, and it's not. There are lots of other legal and regulatory frameworks that would apply to non-financial activities, and the metaverse is something I've been very interested in and exploring. And so we need to think about international trade, data, privacy, commercial law, all of the other things that apply to non-financial activities. And then there's just the technology itself. And just like any other technology, technology is not inherently good or bad. It's a technology, and you need to make sure you have the right controls and oversight over it.
So when we also talk through the global issues, you mentioned that there's other jurisdictions that see the opportunity of this technology and are jumping ahead. I think this is a huge risk to the United States because of the important role digital assets and blockchain technology will play in the digital economy for many years to come, and that there's financial applications, but there's probably just as many, if not more, applications that are non-financial services related that will be built on blockchains. So it's absolutely essential that we get regulatory clarity here in the United States to ensure that we don't fall behind. Where do you think that's going to come from? Where do you think we'll see movement first from a policy perspective?
So I really hope that this point that promoting American innovation and promoting American leadership, it's not just a talking point, it's a real thing. When you think about, what contributes to our national security, we have our military power, of course, but we also have our economic power. And we need to be really conscious and cognizant of anything that might sort of undermine the US dollar's place in the world economy, or in, we can't take it for granted where we are. And I think with a lot of the turmoil that you're seeing today, it's just a reminder that you can't take things for granted, right? So unfortunately, as I've said before, if you think about what's really the sticking point here in the United States, it is, what is the definition of a security? And because if it's not a security, then the CFTC generally has some regulatory touch points over it. Well, who can define what is a security? The Congress, of course, the SEC, or the courts. And out of those three tracks, I think you see the courts moving the fastest.
Yeah, absolutely. Well, Commissioner Pham, thank you so much for joining us today at the DC Blockchain Summit. And thank you for your leadership in addressing digital asset policy at the Commission and helping lead the industry forward.
Thank you so much for having me.